Welcome to another Blazing Ball video. Today we're going to look at whether there is a tech market crash imminent in the stock market and what you can do to protect your money, what measures you can put in place to protect your wealth. So let's get right into it. For the past 11 years, we've been in a major bull market since the end of the 2008 housing crisis. The stock market, namely the S&P 500, has been on a constant rise since then, apart from the March lows of the pandemic. But since the beginning of the pandemic, there has been a V-shaped recovery, but all the money printing from the central banks has led to people worrying whether or not there'll be a second drop in the stock market due to increased inflation. But this time even worse than it was before. Big investors like Ray Dalio have warned about another depression as we're reaching the end of a long-term debt cycle, which typically lasts around 75 years. This one starting back in 1945 and ending around now. So we're due another big drop, and with the big drop there'll be big losses. Well, looking at this recent bubble, it's mainly been led by big tech companies, and that's been primarily the growth industry that's led the charge of the bull market. If you look at the Nasdaq compared to the S&P 500, where the Nasdaq is primarily made up of big tech firms, you can see that the difference between the growth of the two is huge, and you can tell what's mainly been leading the charge in the rapid growth of the S&P 500 and the stock market in general. Even the Nasdaq itself is mainly made up of 5 big tech firms, namely Microsoft, Apple, Amazon, Google and Facebook. So essentially owning the S&P 500 is basically like putting half your money into those 5 stocks. Thus, because of these big 5 tech firms, this has severed the tie between the stock market and the underlying economy, which the S&P back in the day used to be a good indicator for how well the underlying economy is doing. However, these days, because it's led mainly by those 5 companies, it's more a big tech index than it is an actual economic indicator. So the question comes back to, how can you prepare for the next stock market crash, and when is it going to happen? Well, anti-climatically, no one knows. No one can really forecast the market, so I'm not going to pretend to. But what we do know is that a lot of big institutional investors such as Ray Dalio and Peter Schiff are already predicting the end of the bull market. A lot of big experienced investors such as Warren Buffett get a bit skeptical when stock prices get too high, which they are right now. You ideally want to buy low, you don't want to buy high. But with a lot of people wrapped up in the frenzy of the higher and higher stock prices, especially in big tech, everyone's pushing the stock price higher, but the music has to stop eventually. So the best thing you can do right now is to keep out of big tech and move into hedges such as gold and silver. Ray Dalio, in a TED interview back in April, said that cash is a bad investment, but is an investment that everyone thinks is safe as it has a relatively low volatility. However, it taxes about 2% of your buying power every year. It is almost always the worst investment one can make. He went on to recommend you diversify your investments as much as possible. Own gold, as he has claimed in the past that he who does not own gold knows neither history nor economics. Gold has also been referred to as sound money by the likes of Peter Schiff, as it was the original currency before we had paper money due to its properties giving it intrinsic value, such as it being able to conduct electricity and be made for jewellery. In fact, money used to be linked to the value of gold before the US dollar went fiat in 1971. He believes that the world will move back to the gold standard as soon as they realise there is no real value that the US dollar backs. And as a lot of these foreign nations, such as China, hold a large amount of US government bonds, which the US will default on, they are going to call for a new world reserve currency, and he claims that will be gold. And Warren Buffett, the man who spent a good deal of his life being against gold by claiming to never bet against America, is now betting against America by selling his positions in US banks and bought into gold mining stocks. A very bearish sign for the US stock market, showing that he in fact now must believe in gold. He's always claimed gold to be a non-productive asset, which he's right. It doesn't produce any dividends or produce an interest rate. It's just a commodity. But I guess that's why he's brought into the actual gold mining stocks, because it's a productive asset. Anyway, Buffett seems to be bullish on gold, which is a first. All this seems to make a strong case to be in gold, but also if you actually look at the dollar index, it is continuously making new lows, which is a very bullish sign for gold as investors rush into it to protect their buying power. Not only does gold look like a wise investment, but silver also has been making great gains and looks to continue to do so. While gold is making new highs, silver is still a fair way to go before it makes a new high above $50 an ounce, with analysts predicting it will end the year at $35 an ounce, up from the $28 at the time of recording. So after listening to the big boys in the investment game and how they are handling the potential outcome of a stock market collapse and even a depression, how am I going to go about making my investment decisions? Well, for starters, I have shifted a fair chunk of money from my tech stocks and index funds and moved them into ETFs that track the price of gold and silver, as well as gold mining stocks such as Centamin, Barrick Gold, and Polymetal. I believe gold and silver will continue their bull market runs for the foreseeable due to all the excessive money printing by the central banks. Thus, this increases inflation, which pumps their price up. So I will continue to hold these positions for at least the next year until we're out of this mess, or if new information presents itself. At least that's my personal approach to the information presented by the investors referenced in this video. However, I'm curious to know what you thought. Let me know in the comments how you're approaching this, or how you would approach it. I do want to try and create a community around this sort of thing where we're sort of discussing how we approach some things for the low income retail investor. How would we invest in fractional shares and in big stocks such as tech stocks, and how we deal with new information from the big investors. I want to try and start building a community around this. So if you're interested, please subscribe, please show some support, because obviously I'm at 0 subscribers at the moment, so I need support at the moment. So I'd very much appreciate that. If you could, drop a like and subscribe. Even leave a comment. I can take constructive criticism, so how I can improve these videos, what you want to see from them. But yeah, apart from that, have a good one. I'll be dropping more videos like this soon enough. I haven't quite figured out the format yet, but I do quite like the format of this particular video, so I might continue to do this sort of thing and discuss whatever is going on in the investment world and the technology world. I also have a Twitter set up now. It's at the handle @blazing_bull. So please give that a follow if you want to support the channel on other platforms. Cool. Alright, have a good one.